Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning October 3rd. There's one central bank meeting in the first part of the week, but very little drama attached to it as market observers unanimously expect no change in rates. The focus, therefore, will be on the end of the week when we get the monthly U.S. nonfarm payrolls and the IMF and World Bank hold their annual meeting in Washington. More data on Britain should keep sterling volatile as well. The Reserve Bank of Australia, the RBA, meets on Tuesday, but not one analyst polled by Bloomberg expects a change in rates. The market doesn't even think there's a 50-50 chance of a cut until next May at the earliest. Sentiment's been shifting away from the possibility of a cut as the economic data for Australia improves. The economy is expanding at a faster pace than the RBA forecast, and the unemployment rate's falling. The change in sentiment towards rates is supporting the currency and keeping it stronger than they'd like, but really it's not much change since the last meeting a month ago. So I don't even see much reason for the RBA to change their language about that. I expect this month's statement should be much like last month's, and I don't expect it will have a great impact on the market. The U.S. ADP report on Wednesday and the U.S. non-farm payrolls on Friday will be closely watched for their impact on Fed policy. Some recent Fed speakers have been at pains to point out that not only could they hike in December, but the November meeting is still live, even though there's no press conference and the meeting ends a mere 6 days before the U.S. presidential election. In fact, I think it might be a wise move to hike then, if the data support it, simply to demonstrate that the Fed is independent, contrary to what one presidential candidate has asserted. The NFP forecast of 170,000 is higher than the August figure. That would show that the U.S. labor market is still very strong. It could raise the odds of a rate hike, at least in December, and therefore be supportive for the dollar. The World Bank and IMF hold their annual meeting in Washington Friday to Sunday. Ahead of those meetings, the G20 finance ministers and central bankers will meet on Thursday. This meeting comes just a few weeks after a G20 summit that pledged to increase policy coordination, but, of course, as usual, without requiring anyone to do anything specific. The agenda for this G20 meeting will apparently be the global economy, which is fair enough for these guys. While no specific policy measures are likely to come out of all these meetings, G20, IMF, World Bank, etc., the majority of market-moving officials in the world will be in Washington, with thousands of journalists swarming over them. Many officials are likely to give press conferences or make presentations that will be widely reported. We can expect that their comments will affect trading early the next Monday. The other focus of the week is likely to be the data out of the UK. Starting with the UK Manufacturing Purchasing Managers Index today, the UK announces its construction PMI on Tuesday, services and composite PMI on Wednesday, and house prices, industrial production, and trade on Friday. The PMIs are all expected to be down somewhat from last month, which could add to the recent negative sentiment towards sterling and weaken the currency further. As for the EU, German factory orders on Thursday and industrial production on Friday are the only major indicators. There are no major economic indicators coming out from Japan this week. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.